The IPO of Premier Energies is now open for subscription. If you're wondering whether to jump on this opportunity, this video has got you covered. But first, let's dive into the essential details you need to know. The Premier Energies IPO kicks off today, August 27th, and concludes on Thursday, August 29th. And the stock is expected to list on both BSE and NSE on September 3. The price band for the IPO is set at Rs 427 to 450 per share, and you will need to apply in lots of 33 shares. A quick overview about the company. Premier Energies, founded in 1995, is India's second largest manufacturer of solar cells and modules. With 5 facilities in Hyderabad, the company boasts an impressive annual production capacity of 4.14 gigawatts. They are key suppliers to major names like NTPC and Tata Power, although most of their revenue comes from within India, with just 14% from exports in financial year 2024. The company has seen revenue and profit surge by over 100% and 400% respectively from FY22 to FY24. But keep in mind, they rely heavily on Chinese raw materials and a handful of major clients, which could be a major risk factor. To help us understand whether you should subscribe to this IPO or give it a pass, we have Kranti Bhatini, Director of Equity Strategy at Wealth Mill Securities, joining us. Kranti, what's your take on the Premier Energies IPO? The company has demonstrated robust revenue and profit growth. It has a strong order book of about 5,300 crore rupees, and expectations are that it will benefit from India's strong commitment to renewable energy. But they are seeking a price to earnings valuation of about 51, which makes me think it's on the pricey side. Your thoughts?
Yes, Raj. The sector is in an uptrend, okay, and we can see complete revival of the sector, renewable energy. And Premier Energies is taking the advantage of this sector. So when the sector is in uptrend, definitely as the markets are trending at 25,000 levels, every promoter want to sell their equity at premium valuation. So that's what Premier Energies is doing. So there is a great saying on Wall Street. In the beginning of the bull market, promoters have a vision and investors have a money. And at the end, the promoters have money and the investors have vision. Okay, it should not be the case. It should not have been the case. So the promoters are trying to sell their strong vision at a premier valuations at this point of time. But given the kind of the strong clientele and the sector synergies are concerned, okay, that is helping this company, okay, to be at a strong path.
While the company is India's second largest solar cell manufacturer, it faces significant competition considering presence of multiple players in the same segment. Do you think it will be able to maintain its competitive edge in the industry that is still growing?
So we need to see how the sector outlook is. There will be a greater focus towards the renewable energy and also the government, the new policies. The government focus on this renewable sector, renewable energy and the solar sector is concerned. That will give us a tailwind support to this whole sector. And definitely this company can, given the kind of market share they enjoys as a second largest player in this cellular solar cells and wafer segment is concerned, but they are going to take the advantage overall. And Suyash, we also need to take into cognizance at this point of time, this sector went through a rough patch in the past 15-20 years. So right now, it was the survival of the fittest, and companies like these, okay, they could be able to survive and face all the headwinds. And now the change in the business environment and also greater emphasis towards the green and renewable energies, helping the companies to sail through at this fast pace.
Now, Premier Energies has significant exposure to China. Any supply chain disruption or regulatory curbs can prove to be fatal for the company, isn't it?
So always these kind of supply chain disruptions will definitely going to have the impact. But we need to see overall, okay, how the things are going to pan out. Of course, it is not only with respect to this sector. Many sectors are going to get impacted if there is any disruption in the supply chain management is concerned.